Good evening, all. Hope you're doing well. We're Euphoria again, and so that's been like a constant theme since Friday. And we had that poor NFP release. We've also got some Middle East stuff going on, and also Russia and France as well, which is a little bit strange. France are talking about sending their troops over to Ukraine, or they have done, which is a little bit bonkers. So there's loads and loads of reasons to be bearish, but we have to remember we have to try and do the opposite of the herd. Like the thing is, they're using common sense and logic, and it makes sense that you'd be bearish when you look at all those geopolitics. Okay, but if they're going to sell it, there has to be someone to buy it, and that's the thing. We don't really want to fight that large entity because they've got vastly more capital than us, and then they can push price as well. So we did see a bit of a stronger dollar this last couple of hours, and we're seeing a tiny bit of a reversal on that dollar strength. So it could have just been like a retracement. Normally, when we have a risk-off scenario, we see a strong dollar, and a good way to know if it's going to be a legit risk event is simply by looking at your VIX. This is moving towards positive territory. We were minus 1.3. So something is spooking the market a little bit, not dramatically, but that is moving into positive territory. Once that goes green, the indices should be going red. Okay, so that would be the normal correlation. So something is obviously going on, and there are a load of things that could be causing price to fall on indices. Lots of reasons for price, for a risk to puke. So I am that VIX. I did link the VIX in the Discord channel, in the Treasury yield channel in Discord. So you can just keep an eye on VIX. It's really, really important. And how are we looking? FTSE in France, really pumped. And the indices actually really pumped, but we've lost all those gains. We'll get back to its daily open. So something's definitely going on. It could just be just a wishy-washy day. Marco was saying in Discord we could be wishy-washy sideways range up to the CPI. So that's not really ideal for us as traders, but it might just be the case where the big fish are just looking for clues, and we might just be a little bit sideways. So that's that. So we are euphoric. It's boring, I know, but it is what it is. Lots of green on the screen. So we come down to Tuesday. Remember, I was away, so the average is going to be a little bit out of bonk, only slightly because we missed out Monday. It's not like a big issue or anything like that, but just so you know, when we do the averages, it's just we haven't taken into account Monday, but then that will get done next Monday, so it's not really a problem. Now DAX is green. I'll show you why. They really sold it, and EG also, and EU, US 30, and S&P. Oil is actually quite bearish. They're actually going quite long on oil, and we could be like bottoming out a little bit technically, but it's going to struggle if they're going to add long, because if they go long, the large entity is going to have to sell it, and they have been selling it and they're making a lot of money. So that's that. So let's probably go through Discord. So oil, I guess we could start with. It kind of makes my life a little bit easier if we look at the Discord, because I'm only going to be duplicating what I've just posted. Because I'm just going to go to FXCM and then show you boxes and lines and stuff when I've already done them. So here's oil, and you can see how it's like materialized. So this is where we were sort of, going fairly sideways. Made that down channel, and the supply fallen quite heavily, and continued to fall, and continued to fall. And then it looks like potentially, technically, we could be like making a bottom. Okay, gold, and anyway, so we should be above these boxes, right? See these boxes here, and this obviously corresponds to this area. Massive pump. So yeah, that's correct. That was spot on. Good if you called it. Nice pips, really good profit. And it's all a case of knowing where your exit is. And then if you know where your exit is, then at least where your target, you get a 2R, it's okay, it's fine. But if you don't know where to target, then it might have come back down to your entry, right? So you've got to know where your stop is. It's so important. And now what's happened is that we created a supply. We've seen an increase of bulls. What happens then, of course, price is going to fall. So that's gold. Spot on. We'll have to wait to see if that's spot on. But historically speaking, it's incredibly accurate. I'd say probably 80%, 85% of the time, maybe more. So, we can just come back. Just have a look. When you join Discord, scroll up in the channels. And that's me having a look at the NES indicator. That went to last, but that's fine. That's fine. We're just doing a bit of testing on a demo. But yeah, join the Discord and just scroll up. So if you're interested in, say, I don't know, the S&P, then you can just, have a look, see how we've done. So let's move back so you can see. Okay, so this is that move. They've gone long. So we saw a price fall. When they go long, we create a supply. So price fell. And this is the close. This is the closing minutes for April. Really heavy selling. Heavy selling. And then at that point, they changed their mind. And then they sold. So they were looking left. And they thought, oh, this is actually really bearish. I think I better sell because I can't go long. Look at that. That's just too scary. I think I need to get out of that. So this bit here is a potential trap there, okay? And they'd sold. Created like this kind of strange sandwich. And then that was the trap. So remember what I was saying up here? The trap. Here. It was. They shouldn't have been paid. And we just rallied. Really strong. And now the thing is with this, is that we had all this bullish momentum behind us, and at the first sign of any bearishness, they sold. And by selling it, we have a buy, and it pushes price higher. So they're not looking at the candles prior, they're just looking at price action in the moment. So I think what happens is that they are in such a state of fear, they're looking at price action in a sort of a tunnel vision. They're not looking left or right. They're just looking at price action, and you should be looking at things like momentum and also the sentiment as well. The sentiment is really important, but they're just looking at that and think, well, it's bearish. It must be bad. And so if I get in now, it's going to be a good time. And it just so happened that they were completely wrong, as they're proven to be nearly all the time. And pump. And, there's a pump here. And that's them getting paid. They sold it, and we shouldn't have had that dump. So that was a good time to get in. And out we come. So it says just maximum cruelty. Andy had a good point, is that he's saying it's hard to trade because the fear of buying the top is as bad as selling the bottom. Now the thing is, if you're looking at this, do you really want to be buying up here? And that's what they do. They make it so it's so unattractive for us to enter at this point. It'd be easier to sell it because at least we know where the stop is. Right? Now, if we're going to think about going long, where do you put your stop? It's a lot clearer if you have your stop up here, because you've got an identifiable location to put your stop loss. Now, if you're looking long, where do you put it? Using the FXCM trading station, you know where to put your stop loss, but they're not looking at the sentiment. So it's a good point, but it's just incredibly cruel. And covered gold. Oh, DAX. I guess we can look at DAX, can't we? So yeah, big top. So sold, up we come. They went long, down we fell. They sold, chop, and up we come. They sold. And I was saying here in this message, and see what we should have had is an M, right? So we should have had an M and a nice move to the downside, and it would have been a nice entry for us to go long. But they decided to sell very heavily, and because of that, we didn't get a completion of that M. So we should be making a nice nice pattern, but they sold it, so it screwed up the technical analysis, and they shot themselves in the foot. That's what I was saying. They shot themselves in the foot there. Now this conviction here was very strong. Okay, so that arrow, you think that was going to hold resistance? It probably should have held, but they know they had that strong conviction, and then they sold with strong conviction, and that we come. So that's the video. Not much to say, because on the FX side of things, we are ranging a hell of a lot. Come to QDB scores. Look at that. All right, you've got buy, you've got a buy, and then you've got sell. Everything else is saying stay away, sit on your hands, wait for a breakout. This is why the market bias is really good, because this is looking at fundamental and technical data, and that also includes the COT as well. So when it's ranging, it'd probably be advisable to sit on your hands. And we don't have many setups, because we've got 1, 2, 3, 4 currency pairs that actually aren't ranging, they're actually trending. So that could be a good sell, and that would correspond to the fact that they're long, so that's fine. And they're very short EJ, and they're very short Swiss J, and they're very short UC as well. So that should be green. That's fine. That should be green. That's fine. Green. That's fine. Red, green. So then, therefore, I think that might be the best one, is CAD Swiss, because the weekly change is positive when it shouldn't be. It's got a poor score, and we've got sell. So you could look for CAD Swiss, sell. Okay, so if you're trading FX, it's going to be a choppy week until the CPI. If you're trading indices, you just got to be careful, like anything, but it's tricky, because where do you put your stop? Okay, and an annoying thing is it will come down to retrace to move higher, and it'll take your stop out in the process. So you have to be quite careful, and it's just a case of just, if you can get a sentiment indicator on your chart, then it will really help as well. And this is really good for the indices, as you can see. And using the indicator, you know where to put your stop loss, but without the indicator, I think you might struggle knowing where to put the stop loss. So that's today's video. I'll be back tomorrow. Remember to trade safely, and I will I'll try and get something across during the day if I spot anything, but I think we're just going to be a little bit choppy. And whether or not that was a legit move on the dollar as well. See, we haven't really fallen the technical scores, so I think that dollar might be fake, and the VIX isn't going into positive territory. So it's likely it's going to be under a bit of pressure, the dollar. And that dip that we saw on cross USD was just a retracement. Okay, it looks very convincing, but then you've got to be patient with it as well. Oh, and also the robots going fine. We had 2 wins and 1 losses. The aggressive bot has opened up so many trades, it's ridiculous. It may be profitable, we'll have to wait and see. It opens up the Euro USD buy sell, but it's all well and good, but if we don't get a breakout, then it just accumulates lots of orders. And of course, if we don't break out, then it just basically consolidates, and it's going to aggregate a ton of positions. So if we have a breakout and continuation, absolutely fantastic, be awesome. If we have a breakout and then a fake breakout and then go back in the range, it's going to be terrible. All right, so this is what I'm doing with the testing, and I'm going to be quite busy doing the testing, but if you want to help test, just let me know, and I'll speak to you soon.